It is Biz Brew on U2 America. Great to have you along today. And look who's here, Brent Wilsey. Wilsey Asset Management. You know, I always hijack Brent when he comes in here. Brent and I met, by the way, when I first got into radio. I'm going to call this 18 years ago at a small station here in San Diego. And we were both, I think we were back to back on a radio show at that point.
That's right.
And Brent still is in radio, and this show's
some funny times back then, wasn't it?
Well, I'll tell you, and you know, well, that was the dotcom bubble, if you recall. And we had never seen anything like what we were about to see. And if we would have put Sully and Brent.com, we'd be millionaires, even without a business model. Do you recall that?
We missed that boat.
Oh,
but you know, to let people know how long ago that was, I was so excited because we used Prodigy.
Yes. And CompuServe.
Yes.
Yeah, that's right. In fact, internet, what was interesting then is you would actually have to physically trade stock on the floor. It was the computerized system was just getting in place.
Just started,
And you know, the pink sheet stocks and the bulletin board stocks were on a bulletin board, and there was a pink sheet that came out. You know, all the risky investments and stuff. And what was really interesting during those times was the dot-com bubble, which of course burst. And it was a big lesson to be learned about putting all our eggs in one basket. And a bigger lesson learned, I would argue, that your style of investing is smarter than most people because you were still looking at balance sheets back then. You weren't looking at, I mean, you were looking at price to earnings ratio. You were looking at you were looking at the management team, and you were actually looking at the P&L of the company.
And I would tell you, people said, "How stupid you are! You don't know this is the new economy." And I said, "No, I'm not going to buy Cisco at 65." Oh, you know what you're talking about? I avoided all those crazy things, and back then,
and guess what? You're still here.
Still here, and we didn't lose any money. And we actually made money because we were buying things like Rouse and Perina. We were buying some banks that were doing well. And people said, "Oh, you only made 95% that year. Oh, you're not very good."
I think you were the one who introduced me to a stock called Micron, although you weren't an individual kind of stock, but you came up to me at one point and you said, "Here's a company that has no debt and has a technology. Now, there's a technology company I would invest in." Which I thought was really interesting because that's really what it was about. It was about you know, debt. We were talking about Greece. And the Greece crisis, and you know, there's a thing that we call a pure market. And a pure market, of course, is when you don't have noise from Washington, you don't have noise from Europe, and it happens about twice a year. So, of course, you know, you look at the Dow Jones, NASDAQ, and S&P today, all up. In fact, if you look at the charts, the Dow was up 104 today, closing at 18,120. As a technician, I would call this stock a buy. If the Dow were a stock, it would be a buy on a short-term basis. NASDAQ up 37 today at 51.54, record highs again today. Unsupported highs. I have no idea what we're doing here on the NASDAQ. This could have to do possibly with Apple. S&P,
I like the colors.
I like the colors. Yeah, the colors are nice. That's the only reason. That's the only time Brent looks at charts is when he's on this program and I'm making them. S&P up 13 points at 21.23. We're above the 15-day moving average. We're above the 50-day moving average. Down here at the very bottom is called a stochastic oscillator. That tells us that we're probably too expensive for this trading range. All of that being said, fundamentally speaking, the only reason we copped up today is because they said they had a deal in Greece. The only reason we popped down Friday is because Greece was going to collapse.
Right.
Give us the lesson why we don't care, or why we shouldn't care.
You know what? You don't even know how to spell Greece. I don't care how you spell Greece. You don't have to worry about Greece. Greece is smaller than the state of New Jersey. Their economy is very small. Something's going to happen there. And if Greece does back out of the euro, they're so small it's not going to matter. Actually, it's going to be very positive. If you want a great place to go to the Greek islands. You know, enjoy that stuff. But don't investment-wise, it is not going to make IBM or Apple computer, oh my gosh, you're going to sell less iPhones, less computers. And that's what people have to realize, that, you know, Greece is not going to be this major downfall of an economy.
And I think what's interesting about this entire process here, if you take a look at Greece and you take a look at sort of what happens in this when these I guess news stories come out about Europe and even Washington. You know, remember the debt ceiling talks and stuff like that.
Oh yeah, what happened to that, right?
It'll tell you how this market runs on fear and greed, but you shouldn't run your investments on fear and greed.
Exactly.
And that's different. Fed Reserve, of course, Chairman Janet Yellen threatening to do interest rates. Another way that the market reacts when maybe it shouldn't. Fed Reserve balance sheet no longer increasing over the last 5 months. It's declined by $25 billion. What does that mean, and why do we care?
That is so important because, and again, I'm so glad to talk about this because when I talk about the mainstream media does not talk about that. They want all the negativity. But for investors, you can't watch the mainstream media because it's going to get you fearful about things, and when things are going right, they're not going to tell you. What this all means is that things are not getting any worse. It's kind of like, let's put it into a consumer type thing. Your mortgage now is not going to go up any longer. You're starting to pay down your mortgage and your credit cards. Now, we still have a long way to go. I mean, the balance sheet is now, the balance is what, $4.45 trillion?
Yeah, in fact, let's go to usdebtclock.org, usdebtclock.org, and that'll kind of, what's scary about usdebtclock.org is it looks like a speedometer.
Yes.
But it's interesting. So our balance sheet is looking better. How does that relate to a better economy? How does that relate to more money in my wallet?
It really doesn't have a whole lot, because everybody gets kind of worried and they focus on that. And I look at these little numbers going like, wow, that's very fascinating. It means nothing. Because again, the government is not going broke. I mean, our debt to GDP, and you mentioned what GDP is, and I kind of say too, if you have a debt of $100,000 and you're making $90,000, and then your income goes up and your debt goes up to maybe 110, but your income goes up to 140, yeah, your debt went up, but so is your income. So our GDP is doing better. We're improving. The Fed balance sheet is something different that is actually what the Federal Reserve carries for the government.
Sure.
And as loans come due, it falls off the balance sheet. But everybody's concerned like, oh my gosh, the Federal Reserve has all this debt and so forth. It will be paid off, but again, it's like paying your credit cards off. It doesn't happen next week. It takes years for this to happen. So that debt falls off, we'll be okay.
So comparatively speaking to, let's say, whatever, 2015 now, let's say 2010. Are we going in the right direction economically speaking, or do you think we're still treading water like we have been for some time?
The bad news is reversing, because back in 2010, things were increasing. And remember how the mortgages, they're floating all these mortgages? Well, that's where that debt comes from. They're not doing that any longer. We're now talking about increasing interest rates by a small amount. It's going to take 5, 10, 15 years for things to really change. So don't focus on your investments on that. I've had people say, oh, I'm not going to invest because of the government's debt too high. I go, what does the government have to do with how many iPhones are being sold? Nothing.
Right.
Look at the fundamentals of the company. Stay away from the government. The government has always been bad. It's never been a good place to look at.
And here's the other thing too that I want to talk to you about is because we talk about those individual stocks like Apple, like how many iPhones people are purchasing. We talk about Home Depot going up. We got housing starts and like that.
Yes.
Although you are not an individual stock picker as an investment philosophy, in other words, you're a buy and holder, you look at individual stocks as a portfolio for someone. How do you sort of do that? How do you navigate? And I'm not suggesting you teach people how to do that, but when you're doing it, somebody hands you $50,000 for their retirement, say the guy's 35 years old, he's got a big time horizon. How do you pick where that's going based upon his risk-reward tolerance?
I started this years ago where I said, I'm going to invest my portfolio. And you know what? People say, well, what are you doing? I want to do it.
So do you invest your portfolio like my the 70-year-old grandmother portfolio or the 20-year-old? Same. Yeah. It's the same
thing. And if somebody says, oh, I want to double my money in a year, I'm not the guy. They say, oh, I don't want to.
But I want to double my money in a year, Brent. What are you going to do with
that? Well, you're not the guy. I'm going to say, you know what? Go see somebody else who's going to do that and not be able to do it. But I'll try to bring them down and say, look, if we do 8, 10, 12% on average per year.
Can you do an illustration of 8, 10, 12 if with a proper money manager? Is that is an 8% return on investment? Is that I don't know. Is that optimistic or too optimistic in your mind?
No, and it depends when you go into. I mean, because back in 2010, 10, 12 was pretty easy. Now we're a little bit higher. Maybe it's going to be 8 to 10.
Yeah.
But I try to be very realistic because it's important to stay on that track.
There has been not much volatility in the stock market for the 2015 for the S&P. Brent's going to tell you why, and then we're also going to break down a couple of metrics for the rest of the year. It is Biz Brew on YouTube America. Follow us on Biz Brew on Twitter at Biz Brew. See you in a minute.